Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities came under pressure over the past week on hawkish US Fed policy minutes, which indicated that policymakers remain divided in their assessment over the progress made on inflation so far and the plans to start reducing the central bank's balance sheet runoff. Minutes reveal that while some members questioned whether enough progress was made on inflation so far and leaned towards further tightening if inflation worries resurfaced, while others supported higher for longer rates to tame inflation going further. Now, this was in stark contrast to the dovish post-policy commentary made by the US Fed Chair Powell. US equities recovered on Friday after remaining under pressure over the previous two sessions. Nasdaq Composite touched a new all-time high, while the S&P 500 index ended flat for the week. Asian equities came under pressure amid lack of earnings surprises, weak fiscal revenue growth in China, and hawkish US Fed policy minutes. Hong Kong and Chinese equities led the decline, losing over 5%, while Taiwan and Indian equities posted weekly gains. Back home, Indian equities gained for second consecutive week. Nifty index touched a new all-time high over the past week, up 2.2% for the week amid improving fiscal outlook on RBI's windfall dividend, improving outlook on the outcome of ongoing general elections, and strong foreign investor buying on Thursday. Broader markets underperformed Nifty index over the past week, with the Nifty mid-cap index up 1.6%, while the Nifty small-cap index was up 0.1% for the week. Among sectors, all sectors ended the week on a positive note, with capital goods, telecom, and energy leading the winners with gains of over 3.3% for the week. The Indian fixed income market had another good week, with Indian government bond yields falling for the fourth straight week despite a sharp surge in US bond yields. This decline was supported by lower crude oil prices and the news of RBI declaring a windfall dividend of INR 2.1 trillion to the government, leading to expectations of an improvement in fiscal position and likely lower government borrowing requirements. The 10-year Indian government bond yield fell 3 basis points to close at 7.05%, while 3-year and 5-year Indian government bond yield fell 5 basis points and 4 basis points respectively. The INR appreciated against the USD to close at 83.1 per dollar, as the impact of higher US bond yields were negated by weaker US dollar, lower crude oil prices, and improving foreign investor inflows. INR gold fell nearly 2%. Brent crude oil prices declined nearly 4% over the week to close at $82.1 per barrel, as hawkish US Fed policy minutes, strong US macroeconomic data, and a surge in crude oil inventories weighed on market sentiment, clouding the demand outlook. Coming to macro updates for the week, there were not much, except on 22nd of May, the RBI approved a record dividend transfer to the government for fiscal year 2024. Given the robust income generated in the previous fiscal, driven largely from higher interest on both domestic and foreign securities, higher gross sale of foreign currency, along with limited drag from liquidity operations, the RBI declared a record dividend of INR 2.1 trillion. This was higher than the budgeted estimates of INR 1.5 trillion for fiscal year 2025, the dividends and profits, which includes dividends from PSUs as well. This increase came despite the board raising the contingency risk buffer to 6.5% from 6% in fiscal year 2023, at the higher end of the statutory requirement proposed by the Jalan Committee. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.